control. If the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes, halfway on a slow move. It's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive, won't let you down when it's all ruined. Just the same way you showed me, showed me. You showed me love, glory from above, regard, dear. It's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nose dive in the floodlines, tall tower, milk crate. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it out when the sun is ruined. That's the same way you showed me, showed. You showed me love, glory from above, regard, dear. It's all downhill from here. Remember life, remember how it was. Montreal, Michael Jackson, all this shit. Say what up to Mackie, the shoe. Say what up to Benny. Say what up to life and mortality. Running up my bikes, running up. Not for me, nicotine, still in granny six. Take it easy, give me something sweet, which I might like immortality. This is life, life, immortality.
Alright, sorry guys, had some technical difficulties for a minute there, but we're good right now. Hello everyone, my name's Dean, let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is February 15th, 2023, and your favorite crypto YouTubers' upside targets are too low. Your upside targets are probably too low, alright? That's what we're going to talk about today. We're going to talk about the magnitude of this move, okay? Because when we're doing technical analysis, when you're looking at trends, it's very important to key in on the magnitude of the trend, i.e. the proper time frame with which to analyze the largesse, the strength of the trend. way too many traders are going to be too myopic, too zoomed in, and they're going to miss the forest for the trees. So we're going to talk about that. We're going to also talk about the DXY. The DXY is pumping, my friends. Just like we said yesterday, if you listened to the live stream yesterday, you will have seen that our analysis for the US dollar currency index was that it has another leg up. It's going to push up. And typically, you would think, wait, Dean, I thought the US dollar currency index, DXY, was inversely correlated to Bitcoin. And yes, it is. You're correct. You're absolutely correct. So why is Bitcoin pumping and the DXY pumping all at the same time? Everything's pumping. Doesn't make any sense. Well, I'll tell you. Remember the chart that we refer to. Remember what the correlation, the inverse correlation for the DXY, remember this chart that we made up last year in September, okay? Remember that it's a high time frame chart, and each one of these candles is a monthly time frame, meaning we've seen with pure data, not, speculation, not we heard it by, from our favorite crypto YouTuber or whatever. We looked at the data on our own, we did our own research, and we saw that from 2014 to present day, if you charted the US dollar currency index and Bitcoin, you would see a almost perfect inverse correlation. And these candles are each 1 month of data, okay? So within that month, there can be a little more noise. And this goes back to the initial topic, or the overall, the larger topic of this live stream. Don't zoom in too much. Just because the DXY is pumping and Bitcoin is pumping doesn't mean that that correlation is broken. Remember, we're looking at the DXY right now on the 4-hourly time frame. Just because that's appropriate, it's an appropriate time frame with which to analyze this move and this breakout, okay? But in the larger scheme of things, the correlation is still what it is. It's an inverse correlation. Once the DXY reaches this 450-day resistance, you best believe it's going to reverse course, okay? It's going to reject. It may reject in a flat correction, it may reject in a zigzag, but it's going to reject in some way, shape, or form, and that's when the real party starts. People think, all right, now let's go back to Bitcoin. People think that this, let's go on what your favorite YouTuber, how your favorite YouTuber is setting up their charts, okay? And I'm not your favorite YouTuber. There's too few of you in the subscriptions for me to be your favorite YouTuber, okay? So, I'm talking about big accounts. Most big accounts are looking at this move in this way. Maybe if we're lucky on the 4-hourly time frame, but a lot of them are on the hourly time frame or sub-hourly time frame. Maybe they venture to the 4-hourly time frame from time to time, but they're zoomed in on what's happening here. They've got their range set up, they're range trading. They've got everything, they're buying support. They're preparing to sell resistance up here, right? That's not it, guys. That is not it. Okay? That is like, I don't know. I don't have a good metaphor. I don't have a good metaphor. So let me just stop there. It's just not it. Guys, do yourselves a favor. Do yourselves a favor and zoom out, okay? You're literally on the cusp of one of the biggest bull runs you've ever seen. At the same time, half of the analysts and experts are still thinking that there's something bearish, and they're calling this bearish market structure, or saying that the bull run hasn't started, or they're not sure, blah, blah, blah. Okay, there's no such thing as 100%, so let's just put that to the side. As always, when we talk about speculation, charting, doing all of this, it's all probabilistic. So we're looking at things probabilistically and saying, based off of what we're seeing, it's highly probable that this is going to happen or that is going to happen. There is absolutely nothing bearish about this. And if anything, the actual move has yet to start. Let me tell you when the actual move starts. The actual move to the upside starts once we clear this level approximately. Approximately this level. I say approximately because it's all approximate, okay? You know, so many people are giving you like down to the dollar levels, not levels, but like targets. Like at 23,556, we can expect this and that. Guys, we're dealing with levels of support and resistance, meaning that's why I always say I prefer, if time permits, to depict these levels with a box, with a rectangle rather than just a line. Really to underline the idea that you're dealing with levels and not discrete lines. See, we have another level here, okay? The other thing to be careful about is thinking that there's any such thing as major resistance, okay? That terminology, major resistance. You'll hear that throughout, the crypto sphere. People will be talking about, okay, we got to watch out for major resistance at 25K, major resistance at 23.6, major resistance at this, that. There is no such thing. The major resistance is on this chart, okay? On this time frame, okay? And the daily time frame is not even the largest time frame, but just for the purposes of our analysis and what we're talking about right now, let's use the daily time frame. But I'm going to actually make a case that if you really want to see the trend, you need to go on the monthly or on the weekly, okay? But on the daily time frame, this 450 day, or was it 484 day or something? I don't know. 450 plus day resistance that we broke to the upside and retested, that was major resistance, okay? You have to speak clearly. This is not major resistance. And remember, what do we call resistances? Resistances are levels that price has shown you. You don't decide. It's not like a subjective thing. It's actually, there's some objectivity, there's some science behind this, where you look and see, is it a discrete level? Meaning, is it a clean level where price has shown either resistance or support there in the past, okay? And this actually is a level right here that we can say, and we had this before on our charts, but we removed it. But here, let's put it back up again. Guys, if you're getting value, please like, share, and subscribe. Nothing to sell you, but just, like, share, and subscribe. Just for the pat on the back, I guess. I don't really get anything out of it. None of my YouTubes are monetized. So it's just a literal pat on the back, like, yeah, good job, Dean, or thanks. That's it. This is a level. Why is it a level? Because price has shown us that this is a level. Again, get out of the habit of needing to turn on an indicator to answer the simplest of questions. This is very simple exercise right here. Price found that to be resistant, that to be resistant, that to be support, that to be support, that to be resistant, that to be resistant, that to be resistant, that to be resistant, and now support. Okay, now, how do we find support and resistance? Very clearly, depending on the time frame, we want a significant measure of time. So this is on the daily time frame, and we have 244 days with which that this level designated by this small blue box, right? We can change the color to disambiguate it from the one up top. Let's just make it green for the purposes of this exercise. We got Joker colors going on the chart. Let's change that. I'm not a psychopath. Let's make it pink. Pink. Awesome. Like it. Magenta, whatever that is. Okay, so that's a level, because on the daily time frame, there's 244 days worth of data. So that's 244 data points. That's significant. Also, sorry, not 244 data points, but a trend lasting 244 days. And then we have 1, 2, 3, 4, 5, 6, 7, 8, 9 data points. Okay, that's what you call significant resistance or significant support. Guys, don't believe the hype. Sorry. or the fake news. Like, if you don't have a significant time frame with which to damn it, what am I doing? I'm sorry. Actually, that was kind of dope. I like that. Can I do that again? Yeah, let's do that. That's nice. I like that. And let's change this again. I'm sorry. What is going on here? Orange? Fine, whatever. It doesn't matter. Okay? So, once you leave this area, what else do you see that is significant? Okay? Not major or anything significant in terms of support and resistance. At the most, you see here. There's something here. It's not significant. Why? Because although it lasts about, let's see. So up here, you have a level that is 171 days. Okay, it's not 244 days. It's a lot less. It's 141 days. Okay, so it's less important in terms of the time frame for this level, this trend line, or this level, whatever you want to call it. And then it only has 2 data points. You see how this works, guys? Like, understand there is a way to look at these charts and to determine with a high degree of probability where price is going to take a pit stop. Okay? So price definitely respected that level. Okay? No Fibonacci necessary. You don't always have to bust out the Fibonacci levels. Sometimes you just look at the chart, yeah? Especially if it's a straight line type situation. But here, don't expect much of a much resistance. Only 1-2 data points, which is the minimum amount of data points to form a line, right? A line needs at the very least 2 points, or else it's just a dot or a point, right? That's basic math. So we have 2 points which connect, make a line. 2 points does not a trend make. Hardly, okay? So once price gets in this area around 24.4, from 24.1 to 24.4, you can expect a little bit of chop, a little bit of consolidation, but don't expect much because price has shown it to you. Do you understand how that works? Moving forward, after you let's move this. Actually, let's just stay with this. After you leave this level of 171 days and 2 data points, what else do you see? Shit all. There is nothing. Very little. There's what you would call a volume gap. Yeah. Actually, this is probably the next one right here. If there had to be a level, it would be around 30,000, yeah? And you have 1, 2, 3, 4, 5 data points, maybe. And it lasts about, oh, that's significant, like 500 days, okay? So, do expect, again, it's not significant resistance, or sorry, it's not major resistance, but maybe it's significant. It's significant insofar as you might get a little pit stop here. Do you understand? So, mini pit stop here, a little bigger pit stop here, and then a little more pit stop here, perhaps. But again, you do not want to forget the larger scheme, the larger play of what price is doing, okay? All of these little pit stops are not good trading opportunities, okay? Like, people are still thinking like we're in a sideways market. Remember, yesterday I talked about the different types of markets. There are trending markets, right? You can trend up, you can trend down. And there are consolidative markets, sideways up, sideways to go up, and sideways to go down. So sideways to break down and sideways to break up, kind of like what this was, yeah? So there's 3 types of markets. If you're looking at levels in a sideways market, that's actually quite useful for trading, because every single time you see a level, a significant level, you're bound to get a reaction, and that reaction's more likely than not to be corrective, because these sideways markets are nothing but corrective patterns. So you're going to get big reactions at significant levels. But in a trend, it's rather boring. It just goes in the direction of the trend. And it may or may not stop at the levels that you identify. So, practically speaking, what I'm trying to say is just don't make it harder than it needs to be. If you want to make money, you just put in a long or trade or buy and hold. That's it. That's basically what I'm trying to say. Any resistance to the upside is insignificant. Okay? And I'm going to give you an example again with something that's happened just in the recent past. Okay? So many of these experts, so many of these big accounts were talking about, the big dump, and, they use all this terminology, the same terminology for a 10% move as for a 50% move. There's no disambiguation, there's nothing, right? So we go up about 50% and we come down about 10%. And a lot of these accounts are celebrating the fact that, they told you, they warned you, you should have listened, and, they made, Elon Musk's net worth by shorting the top here. They call this a macro top. This is nothing. The trend is, this is 50%, this is 10%, this is an intra-wave consolidation. And this is important, and it's not to disparage my peers, but guys, understand. And I'm sharing this because I didn't understand this myself. And I left a lot of money on the table because I didn't understand this very simple concept. The idea is, don't worry about these. Don't worry about these. You can trade them if you want, but don't trade them at the expense of divesting yourself of your positions. Meaning, if you have a position, then just hands off, leave it. Financial advice. That's totally financial advice. You'll see. The ones who will do the best in the bull market will trade the least. The ones who will do okay will overtrade it, or not do well will overtrade it. It's not that difficult. The targets shouldn't be intra-wave targets. If this is clearly a trend and this is a counter trend, even though this lasted 2 weeks, and I know that seems like the entire, Pleistocene era for a lot of traders, because crypto is like a hyperbolic time chamber where every day feels like a year. Remember, you went up 50% and you went down 10%, and now you're going back up. The smart, big brain, 200 IQ move is you should have been in the trade over here, and you should have not done anything to it with this move. Okay? And that goes back to what we were saying yesterday. If you have a map and you can see where you're going and how you're getting there, you don't care about a 10% retracement when you're probably going to do 5,000% or something. You know what I mean? Just, you understand what is likely to happen. Okay? So it's important to have some perspective. Perspective, patience, planning. Those are the three mantras, or the three sort of taglines. That's a tagline for my investment firm, my trading firm. Without those things, you can't win. You need patience, but the patience is informed by the plan and the perspective. And the perspective is informed by your education and your understanding of the market, your ability to read the market. And your plan is obviously derived from your perspective and your understanding and all that stuff. So they tie into one another. So what I'm trying to say is this. The upside targets should not be anywhere here. And they may not even need to be anywhere here. Okay? Because if you zoom out, and let's now do this. Some of you may have maybe familiar with my high time frame chart, but this is the time frames these are the time frames you need to get on. if you're actually reading these moves, okay? Don't waste your time trading the hour or 4-hourly time frame or even the daily time frame. It's a waste. What you should do is look and zoom out on the weekly or on the monthly and understand that we're in a massive trend to the upside, okay? And it is actually not very practical to answer how we will get there. So like, oh, where exactly are we going to stop? How fast are we going to take, or how long are we going to take once we encounter some significant resistance? And then how long is it going to take us to pump? Just stay patient in the trade and let the trend work for you. Do you understand? Like, it's kind of like rolling down a hill. Here's my good metaphor. I got it for you. You're rolling down a hill. You're trying to get from point A to B. Point A is at the top of the hill. Point B is at the bottom of the hill. Okay? Now, you can just use gravity to get there. You don't even have to turn your engine on. You don't have to worry about anything. You just go. Let's say you're on a bike. You don't have to pedal. Okay? You just go. You let yourself be taken. Okay? But, the trader that doesn't have the map, who doesn't realize that their destination's at the bottom of the hill, is going to stop and rest and, I gotta refuel because tomorrow's gonna be another hard day on the track. But it's like all downhill. So you don't need to do anything. You just need to chill. Chill. This is, and I had that, remember I said, it's all downhill from here. Maybe that, a week and a half, 2 weeks ago. It's all downhill from here. That's what I mean. Basically, ride the trend, okay? It's not sexy. I can't, post about, oh my God. Okay, is it going to go up or down? There's no suspense here. All the hard work was done over here. This is the accumulation. This is reading the difficult or complex accumulation, complex sort of corrective wave sequence. And then, once you got out of this, which we're just about to do, right? Once you trade out of this, you break the range, you retest it as support. That's it. It's done. There's nothing else to do, guys. That's it. You just, if you happen to be listening to this on February 15, 2023, and you happen to be exposed to crypto, congratulations. You will do really well if you do nothing. If you do nothing from here, you will do quite well. Okay? You literally don't have any major resistances in this trend until we get into six figures. Few people understand that. If you're really big-brained about this, and you want to trade this profitably, and let's say, I want to trade every move, you're going to zoom out. The move to trade is once we get up into this region, into 130K or, into the six figures, and then we put in that likely wave 2. That's the big brain move that none of your favorite YouTubers are talking about. Okay? And it's kind of like what I said yesterday. If you only look at the market in one way and trade it the same way, you will have varying results depending on the phase of the market that you're in. If you're trading ranges, you're range trading up and down in this region, you're going to be quite successful if you're good at range trading. That's exactly when you do range trading, okay? Because you're in a range, okay? But if you're range trading in a trend, you're shooting yourself in the foot. You're going downhill and stopping every few miles, killing your momentum because you're afraid of needing to re-energize yourself when you don't need to do anything because it's a downhill it's a downhill path. You don't have to pedal. So this is the thing that, the map of the price action allows us to really understand, okay? Even if you didn't have knowledge of Elliott wave, I'll show you something. interesting. Let's say you don't have any knowledge of Elliott wave theory, okay? But you do know, at the very least, how to set up your charts on a high time frame, okay? Meaning you know how to toggle your log scale on and everything like that, okay? What you do is the following. Okay, let's be consistent here, and let's put the level on. Let's not use a line. Let's use a level. Okay, let's say you don't know anything about Elliott wave, okay? But you know a little pattern trading. And you know how to set up your charts properly. You know how to toggle the log scale. This is what you're seeing. This was resistance, clearly. We rejected 3 waves. We go up, it was resistance. We rejected 3 waves. Finally break up and out. What happens when you break a serious resistance, a significant resistance? It has to be retested as support. So you retest it, usually in a corrective wave, and we all know corrective waves come in flavors of 3s. So 1, 2, 3, corrected high time frame resistance as support, and now you're on your merry way. No knowledge of Elliott wave is necessary to read the high time frame price action for Bitcoin, right? Between 2018 and 2023. If you're looking at the past 5 years of trading in Bitcoin, it's quite obvious, okay? The idea that you're breaking back down under to 10K is, I mean, it's crazy. It's absolutely mental. It doesn't make any sense. As you can see, the principle of SR flipping is consistent. Once you test something adequately, and you've tested this level adequately, right? Made it support. It's strong support now. This level of 14K is strong support, okay? 15 to 14K is strong support. That was the previous all-time high here, previous all-time high here. You don't revisit it. You don't need to revisit it. So that's why I'm saying this is the breakout. Guys, just because it's high time frame, it doesn't mean it's any different. The beauty of technical analysis is that it's perfectly fractal. So let's go on the weekly time frame. You can see the same thing. It's just a little easier to fit on the screen. If this, imagine this were the hourly time frame and you saw this pattern, what would you do, right? You saw this. How would you trade this on the hourly time frame? Forget it's the weekly time frame. You go up, you come back, you retest. How would you trade that? Would you take profit every two seconds, or every hour, or every time? Like, would you care about, consolidations? No, you just let it go. If anything, what do you do here? Imagine again that this is the hourly time frame. How would you trade this? You're a pattern trader. Most of us learn pattern trading first when we're doing technical analysis, right? That's one of the first things people learn. You would take the height of the W, superimpose it from the site of breakout, and you would say, that is my target. Okay, and we've reached the target. Now we retest the resistance as support, and now it's actually, there's no target. Why? Because we're in price discovery. Even though we haven't broken all-time high, you're technically already in price discovery. Does that make sense? The only reason we're saying that 130K or a 6-figure Bitcoin is our next main resistance is because on the much higher time frames, or actually on the weekly time frame still, but looking at the total time frame, or sorry, the entire, looking at the entire trading history of Bitcoin. That's what I was trying to say. Looking at the entire trading history of Bitcoin, you can see this trend. It's a little more of an advanced trend. And shout out to, the first time I saw this was Crypto Mo. Crypto Mo pointed this out. So I'm going to give credit where credit is due. Crypto Mo pointed it out. And then Crypto also, because I think at the time they were living together, he echoed that. But that's the first time I saw that. I didn't see that on my own. But this is exactly why this is the next major resistance. Okay, that's, if anything needs to be called a major resistance, it's when Bitcoin is in six figures. And no, it's not the psychological resistance of 100K. That is not it. Every single time Bitcoin tops, you can see a pattern, and it's a parabola, okay? And that's another mathematical form. I know we're used to lines and diagonal lines, but parabolas are also naturally occurring, and you can see a clean and clear parabola of resistance of the Bitcoin price. And the next time it hits that parabola, it's more than likely going to present as very strong resistance. So this is where I expect us to put in a three-wave move to the downside. More than likely than not, a 61.8% retracement of the price. Okay? So I think we're going to break all-time highs. No, that is not the next major resistance. But we break all-time highs. We go well into six figures. We hit that. Then we come back down and find support where? Judging by the chart. And guys, all of this work has to be done on higher time frames. All of this work has to be done on the log scale. If you're not, you can't do this. So understand, most of these crypto YouTubers who don't know how to use the log scale, they can't even speak to this. You gotta figure out how to do it on your own. Okay? Don't even take my word for it. Figure it out on your own. Go do some research about why this log scale button exists, what it's for, how to use it, all that stuff. Don't trust, verify. Do your own research. Very important. Nobody's to blame if you don't get this and if you don't take advantage of this once-in-a-lifetime opportunity. All right. Now, I put this minuet, or is it a minuet? I forget what the degree is called, minute or minuet wave in, because it's likely that we go up to this 130, 135, wherever it hits, okay? And we come back down to all-time high. A lot of people who can't read charts are going to get back in once we test all-time high. Or maybe they won't, because they'll see, oh, I knew it. They'll think the bull run is over at that point, maybe, and then we're going all the way back down. I don't know. In any case, this is very much likely to happen. We blow by this resistance right here at 69K and hit the six figures and come back down in three waves in this wave 2 of this minuet count. Okay? So when you're talking about, when I say, and I'm not just, this isn't clickbait, okay? I think about the title for the live streams carefully. And I think this is, I try to think about what would be most helpful to people. And a lot of times people just look at the thumbnail and they don't even, take the time to look at the video. So maybe this is helpful. The idea that your targets are too low is rooted in the fact that you're too zoomed in. You have to zoom out and understand what's actually happening. You're going into technical price discovery. You do not need to make all-time highs before going into price discovery. Technical price discovery means that you've essentially, let's do that again. You've essentially broken resistance, retested it as support. There's nothing ahead of you. That's technical price discovery. You're already in it. But a lot of people won't know and realize that until we're actually above 69,000. But I don't expect that to take too long. The last thing I want to say about this is the following. People are conditioned, the market conditions the average trader, the average market participant to feel the flow, to feel the strength of the market or lack thereof. What do I mean by that? When we've been in a sideways market for 250 days, 260 days more, or, almost 300 days in a sideways market, everybody feels like the price moves slowly. They're desensitized to big moves. They don't even know it's possible. A lot of new market participants have entered the market here, so they don't understand. They have no experience. They can't fathom or wrap their heads around the price moving double or triple digits in a single trading day. This is foreign to them, may even seem impossible. But as seasoned analysts, as seasoned market participants, we know the different phases of the market come with different style price action. The sideways price action is torpid, it's corrective, it's slow, it's up and down. But the momentous, the impulsive price action is impulsive and it's quick. And don't be surprised if you do see those double and triple digit daily gains. Because that's basically what the chart's telling us, which is what I'll say. Okay, so that's basically it for Bitcoin. This is why your targets are too low. Zoom out, enjoy the trend. You're going downhill. There's nothing to do. Just get in, hands off. Okay, you can overtrade it if you want, but you're more likely than not cutting into your margins. You're more likely than not going to time it perfectly, because there's way too many points of, there's too much to do it perfectly given the verve, given the strength and the speed of what's coming. Okay. The other thing I wanted to talk about is DXY. So we said yesterday that DXY was most likely coming to this resistance level, right? And why? Very simply, we don't have a crystal ball, but this is one of the principles of technical analysis, okay? Very few things are known to be 100%. One of the things that's 100% in trading is the fact that when you break significant support, you retest it as significant resistance. And that's exactly what we're doing. So this is why I was saying that it's likely that this consolidation at resistance yield a breakout to this level of resistance, and then after that we should see a rejection. Bitcoin is so bullish, crypto is so bullish, that we've gone up in the past, 10, 12 hours. We've been going up despite the DXY going up. That's when you should really, really know the strength of this trend. That we're no longer overreacting to small moves up in the DXY, because all in all, it's going to sort of balance out. The DXY is going to continue to go down, but Bitcoin's going to go up a lot, right? Bitcoin's going to go up a lot more than the DXY is going to go down. That's basically what this is showing you. Okay. Back to our regular watch list. Guys, if you're getting value, please like, share, and subscribe. Now, on the smaller time frames, we see, and basically yesterday was good. We said that we're preparing for the worst case scenario, and I did prepare for the worst case scenario. I read this as, whoops, we're zoomed out quite a bit. I read this as a consolidation level, but that it was possible that we can wick down before continuing up. We didn't. We're really bullish, and we put in a running flat at this level. Okay, a running flat in technical analysis in elite wave theory is a correction, a flat correction, a 335. Okay, but where the C wave doesn't come down below where the A wave rested and went into the B wave. So a running flat is really bullish, where you go like this and you put in usually an ending diagonal, a 33333. Okay, so a running flat is a really bullish corrective pattern. And so on the smaller time frames, if you zoom in, you can see that we put that running flat in. Okay, so we went up, and I think we ran up correctively. Okay, so I was right on that, but I was wrong in saying that this was a flat correction. This was apparently a zigzag, meaning 5, 3, 5. Okay, so again, I love the fact that I read that as worst case scenario, because that's what you want to do for good risk management. Okay, because in the eventuality that this did play out as a flat correction and this came back down, you want to cover your ass and make sure you don't get shaken out, because you know what's coming next. You just want, by hook or by crook, to survive that retrace. But this retrace was best case scenario. It was the nicest and the most innocuous retrace you could possibly have, which is a running flat of a zigzag. So again, 5 waves up, 3 waves down in that running flat. You see the terminus of the C wave ending diagonal didn't come even to the level of the A wave. So a lot of people who were assuming it was coming back down may have missed the trade. Maybe the limit orders didn't get hit or whatever. But anyway, so you have that, and now you go into your final leg. So this is A, this is B, this is C. And now what do? You correct, and you continue. And then you just keep going, and keep going, and keep going, and keep going. That's why we call it an impulse. You don't try to trade it. You don't get in an impulse. You don't get in during the retracements and short. Nor do you take profit at the retracements. You buy more. The only time you take profit is the high time frame analysis, and you notice a significant, again, back to what we were talking about a few minutes ago, you notice a significant resistance. Then you take profit if you so choose. That's the smart way to take profit. Okay, if you're zoomed into the 15-minute, the hourly, and trading this trend, you're doing it wrong. You are shorting yourself. You're playing yourself short. You are not recognizing the larger trend on the higher time frame. Okay, and there's no reason why we can't all make money here, or at least most of us who are long. If you're gonna be long, be long the right way. Be long the right way in a big trend. Don't fade it. Okay, so this is cool, but the real fireworks happen once we break this area. As we saw, there is a little bit of some minor resistance at this level. Okay, these 2 data points, I think, for 100 and some odd days, however long this lasted. Okay, it's not anything significant. Okay, 172 days. Yeah, so that's the next sort of place that you should expect the price to go sideways for a little bit. How long is it gonna go sideways? I don't know, but that's not important. You know what I mean? Who cares? That's the point. That's what I'm trying to say. Who cares? If you're really keen on trading and making money, you don't care about 10% coming down when you just went up 50%. You don't care if you go up temporarily for 2% or 3%. You care about going up hundreds of percent. Okay, so that's the idea, and you can apply that to all the different markets, right? So I posted I was watching Around the Blockchain Bitcoin show. It's a great show if you're not familiar. It's kind of like Around the Horn for sports, but for crypto. And all the best minds in crypto, I think, get in on there and share ideas. Really good stuff. I was watching it, and somebody, I'm not going to name who, said, it was an analyst, a technician, said, Bitcoin dominance is about, it printed a green dot. Okay, you guys know how I feel about people doing primary analysis with indicators. Anyway, said Bitcoin dominance printed a green dot, and it's going to the moon. You should divest yourself of altcoins, because Bitcoin's about to gain massively on altcoins. Okay, and I commented, I said, that doesn't make any sense, because it's been in a downtrend since September, and it's looking actually to go down lower. And whoever runs Around the Blockchain, shout out to you, they replied, LOL, okay. And I responded, hey, do you mind keeping this up just for posterity? But all I'm saying is this: huge account, this person who said that. And they are telling everybody Bitcoin dominance is going up. Meaning, Bitcoin is going to dump and altcoins are going to dump even harder. That's when Bitcoin dominance goes up. Okay? Again, this is the importance of doing your own research. It doesn't matter how big the account, it doesn't matter how big the channel, it doesn't matter how many TV shows they are featured on. If you don't use your own common sense and see what makes sense to you, and you just pair it and listen to whatever, the next big account, the next popular account that the YouTube algorithm serves you, then it's your fault. The only way you can win in this market is by educating yourselves, okay? So do your best to educate yourselves. Go through that process. It's that's all. That's basically everything that I'm trying to underline. It's not to disparage my peers. We all say things that end up wrong. We all make mistakes. That's not the point. The point is, do your own research. Don't take anybody's word for it. Don't even take my word for it. Look at the charts yourselves. Does Bitcoin dominance to you look bullish? Okay, let's just pull it up really quickly and understand what Bitcoin dominance is if you're going to use it to trade. This is a chart we've had for a while, okay? And we've marked up, for months now. And this looks like a bear flag to me, meaning there's an impulse here, this is a retracement, and then it goes into impulse, right? It's quite simple. On the higher time frame, this looks like a complex wave 4 correction, but whatever. If you think this is coming up, I don't know. And it's funny because even if you used indicators to tell you what is bullish about the indicator, a momentum indicator like stochastic RSI, being all the way overbought up in this region, there's nothing bullish about it. It's cross bearish. It needs to come down. That's on the weekly time frame. On the daily time frame, it's coming up. On the monthly time frame, it's all the way up. So you see, so on the bigger time frames, the monthly time frame and the weekly time frame, if I was just to use indicators, and again, don't use indicators as your primary method of analysis. Learn how to read price action and use indicators corroboratively. All right, but if I was just to look at my momentum indicators, they all tell me that this trend is overheated and it's coming down on the higher time frame, on the weekly and the monthly. Okay, so remember, if Bitcoin dominance comes down, that essentially means you're in a bull run. You do not have Bitcoin dominance come down impulsively. I mean impulsively, without being in a bull run. Backtest that. Don't take my word for it. Do your own research. Make it your own understanding. Bitcoin dominance falls down impulsively. It must be that altcoins gain substantially on Bitcoin's market cap. That's the only scenario in which Bitcoin dominance falls substantially. And if you zoom out even more, you can see exactly why it's falling, or why it should fall substantially, right? Our target's 23.9. We've had that for ages. And the reason we've had that target is because it's a simple head and shoulders, right? It's a massive head and shoulders that it's been in for many years. And this thereabouts is the neckline of that head and shoulders. This is left shoulder, this is the head, this is the right shoulder that you've been playing in. Once this breaks down past the neckline, you should expect a massive drop in Bitcoin dominance. This is why I keep saying this bull run is like none other. This is a once in a lifetime opportunity. The entire time I've been in crypto, I don't know that we've had such a steep potential drop in Bitcoin dominance. Maybe here, but then again, here you went down like this, right? In this corrective phase right here. So maybe we do the same thing here, but maybe not. Reason being, if this indeed is a bear flag, this is going to be impulsive. This is corrective. You're going to get an impulsive move there. So this is what I'm saying. This is a once in a lifetime opportunity. If you overtrade this market, you're going to leave so much money on the table for no reason. There's no reason to do that, guys. Just zoom out. Zoom out. Just buy your favorite asset, and zoom out, leave it alone, okay? The other thing, you know, a big account was saying Bonk is a scam. I put a video out on Bonk, and I said I'm really bullish on Bonk, and the reason why is it's more likely than not in a massive accumulation, okay? This massive Wyckoff accumulation, or, you know, whatever, accumulation. Wyckoff doesn't own accumulation. We can talk about accumulation in terms of 2 degrees of AB basing and a pivot, and it's at the base. So you're literally buying the bottom of the bottom, okay? You can consider this to be the accumulation period and anything here to be the bottom, but if you literally bought this, you bought the bottom of the bottom. And I said in the video that's on the channel that people are going to talk about Bonk like they talked about Doge, like they talked about SHIB. They're going to say, oh my god, I bought a few $100s of Doge or a few $100s in SHIB, and had I held it, I would have made this many millions. And they sold prematurely. This is the danger. I'm saying it's a danger of overtrading and taking profits too early in a trend because you don't recognize the trend, okay? If you're offended by this and you benefit from it, I'm not sorry that you're offended by it. I actually don't want to offend anybody. I actually want to help because this is one of the most important things that I've learned. I basically delayed any kind of gratification. My account's doing really well, right? I have a ton of accumulated positions, double digit, over 20 accumulated positions in our bear market that I haven't touched. I haven't even thought of taking profit on. And the reason is because I've zoomed out. I'm not going to cut into my profits. And I learned that the hard way in the past, playing the bull market like a chump, like an amateur in 2017, 2018, and then for the minor B wave uptrend that we had in 2019, 2020, whenever that was. Okay, I'm not going to make the same mistake again. This is why I'm talking about it. It's not enough to make a little bit, guys. Everybody's gonna make a little bit. Most people are going to make a little bit, but most people are going to only make a little bit because they're going to sell too early. Their targets are too low. They haven't zoomed out. They don't see the map of the higher trend going on. So, hopefully this message hits you. If this resonates with you, definitely like the video. And I hope, you use it to change your life and the lives of those around you in a positive way, right? Money doesn't bring happiness. It doesn't make anything better. It just makes you more of who you are. If you have negativity, you're dealing with demons, it's actually quite a big obstacle. Okay, you see it in lottery winners all the time. So I really hope and pray that if you do make money and you do take this advice and you hold your positions and you don't sell early, that benefits you in your life and that benefits those around you. All right. Let's use the rest of the time that we have. We don't have too much time because I have to pick up my son on these days. Let's just go through the watch list. Hey, Akansha, what's up? I'm doing great. It's very nice to be in this phase of the market. Like, we've worked so hard for so long, for hundreds of days. We've been preparing for this for hundreds of days. And we're finally at a point where we can just sit and enjoy the green and watch these positions go up, because that first run in January was a prelude to what was to come. The first retracement is always a little bit of it's a little nerve-wracking. It's like, oh no, was that fake, right? Because you go back, 10% on 50%. And then, especially when you hold strong support, right? That 450-day support, and you continue from there, that's the confirmation, right? We always say, it's not enough to break resistance, you have to confirm it. And once you confirm it, you're home free. We're home free. This is why I'm doing great. I mean, in terms of trading, I'm not taking another trade for months. Unless I absolutely have to, I'm not taking another trade for months. So that's the gist of what I want to communicate in this video. So now let's quickly go through the watch list and just look at what everything is doing. Let's admire our movements, our price action, right? So like the daily time frame looks really bullish, but even the daily time frame doesn't encapsulate the verve, the magnitude of this move. Like I said, zoom out on the monthly, zoom out on the weekly, and really understand what we're doing. Like this is a big freaking deal, right? On the monthly you can see massive resistance, or sorry, on the weekly you can see massive resistance, broken, retested as support. Guys, this is price discovery. You do not, again, I'll repeat, you do not have to make higher highs before getting into price discovery. I know a lot of traders think in terms of higher high is price discovery. Yes and no. Price discovery is also once you've retested and you're out of, how do I say this? Once you retested key resistance as support and you're pretty much going impulsive without restriction. That's, to me, technical price discovery, okay? Okay, so that's ADA, looking great. Algorand. Here, let's and oh guys, I want to show you this also. If you are one to use indicators and indicator suites, look at these technical indicators. They're all maxed out as a strong buy. So basically, if you take, a lot of different traders use a lot of, different types of indicators. But like if you just use the built-in pivot points and indicators that are included in TradingView, maybe you have to be a premium member to enjoy these, I don't know. You can see that basically you're getting strong buy, not just buy, but strong buy signals from pretty much all of them on the daily time frame, not yet the weekly time frame, but the daily time frame, at least the 4-hourly time frame, right, from high time frames. You do not want to get in the way of this. But obviously, if you don't have a high time frame map, you're in the dark, you have no idea, you're thinking, better safe than sorry, I'm just going to take my money and go home. You know what I mean? Like, I'm going to take my money off the table because I don't know what's coming next. I don't want to be, look at this. This weekly time frame is all the way overbought. So, it's probably going to drop down or something like that, right? So this is the problem of, being over-reliant on indicators. Don't do it, guys. Don't do it. It's highly probable. I don't have a crystal ball. Highly probable we're continuing in the way that our high time frame map has indicated, okay? So we already saw Cardano. Algorand, you can see this massive resistance broken, retested as support. This is technically price discovery because this is massive. There's nothing in between. There's nothing in the way. Until maybe this point, there's nothing in the way. There's no significant resistance, right? Bonk, like I always say, very affectionately, my favorite shitcoin, because it's a new project. It's not only in technical, but it's in actual literal price discovery in such a way that none of this matters. There is no resistance. It just can go. So this can put in 500% in a day if it wants to. Why not? It's as limited as, or it's the only limitation is, the fundamental limitations, the supply and like the tokenomics, right? Dent. These major supports, these major resistances flipped into support. You're gone, right? This is massive RS flipping, right? This is a breakout on every single chart. Massive breakouts and just getting started. Ethereum, Litecoin, RSR, massive high time frame breakouts. Shiba Inu, right? Synthetics, Tron is leading the way. It's almost about to run in a really, really violent way. Okay, XRP, Zilliqa, every single one of these looks very bullish. Looks like it just retraced, and turned high time frame resistance into support. There's absolutely no reason to nickel and dime these moves on the small time frames, unless you don't like money, okay, or you don't like gains, right? This is, I mean, DYDX. 1, 2, 3. You broke support, tested as broke resistance, retested it as support. That's it. That's done. It's easy, guys. Zoom out. Zoom out. Zoom out. You know, make some money. Go do something good in the world. You break resistance. You know, we don't have to work forever. At least if you're gonna work, do something you love, right? But just like, you know, sitting there, you know, doing, you know, a million trades a day, like if that is interesting to you, by all means, keep going. But like, this is a once in a lifetime opportunity. But because the opportunity of this market phase on this time frame does not always present itself, take advantage of it. Harmony 1, about to break out. All of these are about to break out. They haven't yet even broken out on a high time frame. That's what I'm trying to say. On the low time frame, must seem like Bitcoin's already broken out. It hasn't. It hasn't. Even Chainlink, it's still in this accumulation channel. It hasn't even broken out. It hasn't even broken the midline of its accumulation channel. These breakouts haven't even happened, right? On the weekly time frame, they haven't even happened. They're happening, on the verge of happening. Same, on the verge of happening. Key, look at this on the weekly time frame. Look at this candle. Look at that. 5 waves up, 3 waves down. Do you see that? 5 waves up, 3 waves down. What do you think comes next? Guys, zoom out. My best advice, zoom out. And don't be surprised by what you see in the coming days and the coming weeks, right? That's pretty much it. Hope that helps. Hope that's useful, guys. Like, share, and subscribe. Take care, and I'll see you tomorrow. Bye.